Picture this, it's a Sunday night, you're scrolling through your tax stuff and you go to pop in your working from home deduction. Same as last year, a rough guess at the hours, your internet bill, maybe a bit on top. Here's what most people don't realize. The rules for that claim quietly changed back in 2022. The ATO, that's the Australian Taxation Office, the people who check your return, now wants you to prove it in a way the old shortcut never asked for. And the tricky part is your claim looks perfectly fine right up until the moment they ask. Let me show you exactly how to make sure yours holds up. If you work from home even one day a week, this is for you. And if you've been claiming the same way you did during lockdown, you're far from alone. That's not a mistake on your part. The rules moved and almost nobody got the memo. Here's the scope of what's at stake. The ATO can review a claim going back 2 years or 4 for messier cases. By the end of this video, you'll be able to do 3 things: check your past claims, build a record-keeping habit that protects you, and clean it all up with a registered tax agent. Let's start with the one number that changes how you'll think about this. Here's the number that should make you sit up. 25%, that's the standard penalty the ATO calls failure to take reasonable care, according to the ATO's own penalties guidance. If your working from home claim is wrong without a good reason, they can add a quarter of the underpaid tax on top of the tax itself. And here's the part most people never hear, that's before interest. The general interest charge keeps ticking on the unpaid amount until you've paid it off. So a claim you thought was harmless can quietly compound. But here's the good news. Every bit of this is fixable, and it's easier than you'd think. So here's your plan, and none of it is complicated. 3 moves. First, you check your last 2 to 4 years of claims. Second, you build a simple hour log and expense file going forward. Third, you clean it all up with a registered tax agent. Each one takes under 30 minutes, and most of it costs you nothing. Stick with me and I'll walk you through each step. Let's start with the thing most people don't realize has changed. From the 1st of July 2022, the ATO scrapped the COVID shortcut and brought in a revised fixed-rate method. You can claim 67 cents an hour for 2022-23 and 70 cents an hour for 2024-25. That's per the ATO and H&R Block summary, and it covers your electricity, gas, phone, internet, stationery, and computer bits. But here's the catch they don't make obvious. To use that rate, you now need a record of every hour you worked from home across the whole year, plus at least one bill for each type of expense. That's the part that trips people up. Look at what actually changed for you. Under the old shortcut, you could claim 80 cents an hour with barely any paperwork. Now it's 70 cents an hour for 24-25 per H&R Block, so a lower rate and a much heavier record burden. And from the 1st of March 2023, the ATO stopped accepting a 4-week sample diary as proof. So if you're still claiming like it's the shortcut era, yours is exactly the kind of claim that gets knocked back. Don't worry, I'll show you the simple fix in a moment. Now I want to be straight with you about the penalties because this is where a small slip gets expensive. If your claim is wrong, inflated hours, personal costs slipped in, or expenses you simply can't back up, the ATO can apply failure to take reasonable care at 25% of the shortfall, recklessness at 50%, or intentional disregard at 75%, per the ATO's penalties regime. And the general interest charge keeps building on the unpaid tax until you clear it. Here's where it gets real. Let me show you the numbers. Let me run this 3 ways so you can see where you'd land. Say you overclaimed using the fixed rate with no proper hour log. On the lower end, a few $100s a year, you might be looking at a small repayment and a modest penalty. In the middle, say $2,000 a year for 2 years. That's a tax shortfall around $1,300 at a 32.5% marginal rate, plus a 25% penalty of $325 and a couple of years of interest, roughly $1,700 to $1,800 all up per the ATO. And if you overclaimed more aggressively, the penalty rate alone can climb to 50 or 75%. Same claim you thought was standard. Here's a belief worth letting go of. A lot of people assume everyone just claims their full internet and a bit extra, and the ATO doesn't really look. The reality is the ATO has openly cracked down on home office claims. It's one of their stated focus areas. You can only claim the work-related portion, and only with proper records, or the deduction gets disallowed and penalized anywhere from 25 to 75% of the shortfall, plus interest per the ATO. The fix is simple: log your hours, keep one bill per expense type, and you're protected. Let me put the two paths side by side so you can feel the difference. A careless 2-year error means a 25% penalty of $325 on top of the tax, per the ATO. A total hit near $1,800 once interest is added. Push it further into reckless or intentional territory, and the penalties alone can top $2,000. The point isn't to scare you. It's that a small overclaim simply isn't small once it's reviewed. The version where you claim what you can prove. Zero penalty risk. Let me introduce you to someone who probably sounds a lot like you. Jess is 36, a marketing manager on $95,000, lodging her own return through My Tax. She works from home 2 to 3 days a week, and for the last 3 years, she's claimed about $800 a year for it. She genuinely thought she was doing the right thing, and honestly, most people in her shoes would think the same. Here's what she found when she actually sat down and read the current rules. Discovery 1. $197. That's how much of just 1 year's claim doesn't hold up. For 2022-23, Jess put down $800 as a rough estimate, but the fixed rate that year was 67 cents an hour, per the ATO, and with realistic hours, about 900 across the year, her legitimate deduction was only $603 per STM accounting. That's $197 overclaimed in a single year, and she never kept the hours to back any of it, and that's before we even get to the receipts. Discovery 2. $2,400, 3 years of deductions, all sitting at risk. The ATO needs at least one bill for each running cost: electricity, internet, phone, plus receipts for stationery. Jess has no saved electricity bills, her internet is in her housemate's name with no proof of her share, and she's got nothing for printer ink. If she's reviewed, the ATO can disallow the full $800 a year, $2,400 over 3 years, even though she genuinely worked from home the whole time. The work was real, the records weren't. Discovery 3, and this is the one that stings. Across those 3 shaky years, Jess is looking at a tax shortfall of around $780 per the ATO. Add a 25% failure to take care penalty of $195, then a couple of years of general interest charge on top, and the total comfortably crosses $900. What she thought was getting a little extra back has quietly turned into a 4-figure bill. Now let me show you how much bigger this gets if she's left it longer. Now let's stretch it out. If the ATO reviews the last 4 years of Jess's $800 overclaims, $3,200 in deductions, you're looking at roughly $1,040 in extra tax, a $260 penalty, and around $200 in interest per the ATO with my own estimate on the interest. Call it $1,500 payable in one hit, and on top of that, she loses those deductions going forward until she fixes her records. The longer it sits, the more it costs. So let's make sure that isn't you. So let's check. Could this be you? Sign 1. You estimated your work from home hours rather than logging them across the year. Sign 2. You don't have a bill for each expense in your claim. Sign 3. You claimed your full internet or streaming without splitting out the private use. If even one of these rings true, that's completely normal. It's how almost everyone was told to do it. You just want to run through the 3 moves before your next tax time. So where does this leave you? You don't need to overhaul your whole financial life. You just need a few specific practical steps you can start today. 3 moves. Let's walk through them together, one at a time. Move 1. Check your past claims. Log into MyGov and open your ATO online services account. Go to Tax, then Lodgements, then Income Tax, and open each relevant year's return. Find your work-related expenses, then the Working from Home line. For every year, ask yourself 2 simple questions. Can I prove the hours, and do I have a bill for each expense type? Just remember, this is general information, not personal tax advice for your situation. Here's exactly how to do it. 1. Open each year's income tax return in ATO online services. 2. Find your working from home deduction line for every year. 3. Flag any year where you've got no hour log or no bills. What good looks like. Every claim backed by hours and bills, and any shaky year set aside so you can sort it out. Once you've spotted the gaps, the next move closes them. Move 2. Build a compliant hour log and expense file for this year going forward. Choose your method, the revised fixed rate or actual cost, using the ATO's working from home guidance. Then start a simple log today, the date, your start and finish times, and the total hours, and create one folder for your electricity bill, your internet or phone bill, and your stationery receipts. That's it. The habit is what protects you. Here's exactly how. 1. Log the date, start, finish, and total hours every day you work from home. 2. Save one electricity and one internet or phone bill per year. 3. Keep the receipts for stationery and consumables. What good looks like? Your total hours times 70 cents for 20 and 24, 25 with every dollar backed by a bill you can point to. Simple, but it's the difference between a claim that holds and one that doesn't. Move 3. Get a second set of eyes and clean it all up with a registered tax agent. Book a 30-minute review and bring your hour logs, your bills, and a printout of your last 2 years' deductions from ATO online services. Ask them to compare your claims against the current fixed rate and actual cost rules, and to flag any overclaims or missing records. A good agent does this all day. It's the fastest way to know exactly where you stand. Here's how that conversation goes. 1. Bring your logs, bills, and 2 years of lodged deductions. 2. Have them compare your claims against the current ATO rules. 3. Where it's needed, voluntarily amend past returns, doing it yourself, before the ATO asks, is what cuts your penalty risk the most? What good looks like? Claims that are apportioned, documented, and far less likely to attract a failure to take care finding. You might be wondering, why bother now? Because the rules already shifted under your feet. Back in 2020, the COVID shortcut let everyone claim 80 cents an hour with barely any records, per Bridgepoint, and that's now expired. From the 1st of July 2022, the revised fixed rate method began at 67 cents, now 70 cents an hour, with strict hour logging per the ATO. And from the 1st of March 2023, the ATO stopped accepting 4-week sample diaries. You now need full year records. The old rules of thumb you've been relying on are simply out of date. Once you've done the work, run a quick check on 3 things. You should see a daily hour log running for the full income year. You should hold at least one bill for each expense type in your claim. And if any past year just can't be proven, amend it now before the ATO ever looks at it, not after. Doing it on the front foot is always cheaper than waiting. Everything I've shown you here comes straight from the ATO's own working from home and penalty guidance, along with summaries from H&R Block and Bridgepoint. I've put the links in the description so you can check it all yourself before you lodge. If you've made it this far, you now know something most people claiming working from home don't, how the rules changed, and exactly how to make your claim bulletproof before the ATO ever asks. Your next step is simple. Open ATO online services tonight and just check your last return. Takes about 10 minutes. And if you want to know which deduction the ATO quietly flags every single year, that's exactly what we're covering next. I'm Sophie. I'll see you there. One last thing, if this helped you dodge a penalty, subscribe so you catch the next one before it catches you. We go through these one at a time, in plain English, so you never get caught out at tax time.